Today is September 6th. Hello everyone, this is Daily US Stock News by Kyle, bringing you the latest stock market updates every day. Please subscribe and stay tuned for more videos. The unavoidable September curse, all sectors affected. Today, after opening flat, the three major US indices quickly turned downward, plunging sharply throughout the session, with no sector spared. Chip stocks and electric vehicles experienced a collective decline, and the internet and banking sectors were particularly hard hit. Other risk assets, including Bitcoin and crude oil, were also sold off. The U.S. non-farm payroll data for August, released today, was weak. Non-farm employment increased by 142,000 in August, lower than the market expectation of 160,000. However, the previous figure was revised sharply downward from 114,000 to 89,000. Even though the July figure was already disappointing, both the June and July numbers were revised down further. This marks the fourth consecutive revision downward for non-farm payroll additions, with 6 out of the past 7 reports being revised lower, further validating the trend that labor demand is weakening faster than expected. After the data release, U.S. Treasury yields and the dollar index briefly fell, with traders betting on a 50% chance of a 50 basis point rate cut in September. Despite the significant drop in the broader market, the VIX, Fear Index, only rose by 12%. On the last non-farm payroll release on August 2nd, the VIX surged as much as 60% intraday, suggesting that today's market might not be as panicked as last time. Today's decline was mainly due to the August non-farm payroll report failing to provide clear guidance. The report's complex information has left investors in a dilemma over the extent of the rate cut in September. It was noted that unless there is a very strong employment report, the bond market will continue to expect further rate cuts. Several executives gave speeches today, attempting to calm the market, but they failed to alleviate investor concerns, and the indices continued to fall toward the close. New York Fed President Williams stated in his speech that it is appropriate to lower the federal funds rate now. Fed's media mouthpiece, Nick Timiraos, commented that the August non-farm payroll report was unclear. Overall, the non-farm data was not bad enough to firmly shift market expectations toward a 50 basis point rate cut, but considering the revised data, it wasn't strong enough to completely dispel speculation about a larger rate cut. Whether there will be a 25 or 50 basis point cut in September remains uncertain. At 11 a.m., Fed Governor Waller came out to reassure the market, saying that the time has come to start lowering policy rates at the upcoming meeting, and if appropriate, he would support an early rate cut. Fed Chair Powell also hinted that the time for policy adjustment has arrived, but did not specify any specific actions. The market is divided, with some expecting a 25 basis point rate cut and others anticipating 50 basis points, viewing the non-farm payroll data as a key factor until the Fed provides a clear stance. 1. UiPath. ARK Invest's Cathie Wood holds the automation software company UiPath, which had bad luck reporting earnings amid a market crash. Despite initially strong stock performance, it was dragged down by the broader market. In the second quarter, the company's revenue was $316 million, plus 10%, beating the expected $304 million. However, it posted a net loss of $86 million compared to a $60 million loss in the same period last year. Adjusted earnings per share were 4 cents, above the expected 1 cent. Full-year revenue is forecasted to be between $1.42 billion and $1.43 billion, compared to the expected $1.41 billion. 2. Tesla fell 8.45%, erasing all of yesterday's gains. Nvidia dropped 4%, and CEO Jensen Huang's recent stock sales have allowed him to successfully cash out at high levels. The founders of Google and Facebook also successfully cashed out at highs. This raises concerns about the arrival of a U.S. rate cut cycle and signals that the stock market may have peaked.